Yeah, good afternoon. I want to believe everybody here, you can hear me. I told us that we should join as quickly as possible. And uh, you kind of slow me down when you are not joining. You slow me down when you are not joining because doing a live recording. Uh, I'm not so sure if this one is going to record because I'm using my old system. So when you don't join on time, you slow me down, and I'm not able to uh, continue on time while I'm trying to wait for people to join. Perhaps uh, we have people here that are not really interested in forex, and maybe circumstances and you wanting to make money. That's supersedes knowledge, and if your want of making money supersedes knowledge, then this platform is not for you, because you must understand what it's all about before you want to invest. So if you don't understand what it's all about before you want to invest, and you are waiting for somebody to show you the way and to always give you uh, um, a signal, then you have totally missed the point. The whole essence of you learning how to trade, forex or any digital economy is for you to really tap and seek knowledge. You are looking for way to make money, and you are not gaining knowledge. It's really a very bad approach to learning. And so when you are given a signal and you plug greedily to the signal, and because the fact that you think the analysis is always correct and what the man has been telling you concerning direction and all of that is totally correct, then if you're not careful, you can put a whole lot of big lot size, because you want to play a fast one on the market. It's really, you are leaving yourself defenseless, and you are leaving yourself open or vulnerable for uh, for a loss, a big loss of your life. So it's when you know how it works and you know what Forex is all about, even though you are given a signal, then you would understand, okay, this signal I'm giving, what are the things, what are the likely scenario that can play out? So when you know the likely scenario that can play out, then you tell yourself, this is how, to engage trading on it. Unfortunately, not quite a lot, a number have joined this and online trading. And at this point, I'm getting weary of the attitude, And if I give you trade, you're not even learning it. You don't know how to deal with your trade. And now you have an opportunity to learn, and you are not taking it. The Yorubas will say something. Yes, you can be disappointed or you can be discouraged because you are losing money because you don't know exactly how to trade. You don't know exactly how to engage this market. The market is new to you. It's not your daily market like OKAJ market or Oyibo market or Monete market or whatever. It's not that. And it's not our day-to-day running that we go to office, we go to bank, and we work and we earn salary. It's not like that. You've got to understand what this thing is all about. Does it pay? Yes. Are you losing money? Yes, because you're losing money because you don't even know what it's all about. And when we give you a trade, you don't even understand anything about money management, and you just put on a big lot size, or even if you use your small lot size, what's your account size? What are the likely things that's going to happen? Because I don't know your account size. To manage your account size for you, by me, it's difficult to say I want to manage your account size. It's going to be very, very difficult for me to manage your account size because I don't know how much you have in your account. And that is why it is important that we know what is happening here. Now, I'm going to say something now that this is Chivian. Once this time, logs itself out, we know the usual thing to do is to click and log back, and we enter back, into another session. So now, knowledge is very key. Knowledge is very important. You cannot make any headway, trying to learn Forex or trying to trade Forex without you understanding what exactly it's all about. So there is no joker, there is no Urijo, there is no professor or Babalawo that can tell you this is what is going to happen. This is the way the market is going to move or the price is going to move. But the thing is that we can see from, what has been laid down, what are the things that we expect from the market? What is likely going to happen in the market? And that is why the knowledge is very, very key. So looking at the structure in front of us, you can see these are waves, waves, waves. The one down, up and down, and up and down, up and down, up and down, like that. This one is big up, and this one is down, up and down movement, and now the up movement. So if you don't understand what exactly is happening, then you won't know how to engage it. You won't know how to engage it. Now, looking at this trade, essentially, it's an uptrend right from here. But is it going to continue an uptrend? No, you must know what the price is doing, the structure in front of you, and how to read it when it's burning itself out. And that is why we are here, to see what exactly is going to happen. And this is YMPR, this is cheap yen, and whatever is happening on the cheap yen, it's similar to what is happening, on all other YMPRs. YMPRs are, yen means JPY, because it's Japanese yen. And it's not only Japan that uses yen, of course, you know that. China also uses it. Most, Asian country, that's their currency to trade. And they are the ones that, trade mostly and controls the Tokyo session, which is about maybe the third biggest section that we have. The biggest is the London section, followed by the New York section. Then you now have the Tokyo, and the last one is Sydney section. So those are the 4 sections we have, in 24 hours. Now, the structure in front of me, of course, you can see that it's a monthly chart, and I'm going to talk about that monthly chart. So, which means that, why do we call it monthly chart? That's every candle, because when I zoom in, it means that each of the candle, you can see this candle is one candle. So this long candle is for a month, and this very small one, activity of 1 month, you can see how small this one is. Let me zoom in again for you to see. So this one here is very small. That's the whole month, 1 month, the activity, the trade that occurs. Then here also in red is a whole 1 month. Here also is a whole 1 month. Now, this big one is a whole 1 month that occurred in February. So we had a big movement to the upside in February. That's a whole 1 month. That's a whole 1 month. And we must understand how this thing works. Now, I'm going to zoom out again for us to, I have given us like a note on what Elliott wave is all about. So I'm going to zoom so to understand this structure. We are not going to concentrate on this structure or on this structure or on this structure or on this structure or on this structure. We are going to look at this structure and what is happening in this area. Now, from here, it's the beginning of a new trend. That is what we can say. Here is the beginning of a new trend. If we want to understand what happens here and the kind of transition in this small zone, you can see a movement from here to this level. Then we have a correction here, and it's a transition before we have this move again. And this is what we want to understand, what is happening here. And we have to look also at this movement here, which is the down movement, and this later, and with this movement. That is what we're going to do. So if you look at this movement is like a big buy. From here, price moved, this is the monthly chart, up to this month, a big buy. And after that big buy, what happened again is that you now have this movement here. This movement also is very big. It's not a small movement. So because this occurred from October 2008 to end around August 2012. That's about 4 years. Yes, 8 years. So what you have in this portion, which is, it appears small, it's a whole 4 years move. So, and how do we understand it? Now, after this is like a change of trend to us, a big move. Then it's after the end of that move, you can see. Let me zoom in for you to see. So you now begin to understand what exactly is going to happen. So after this move from here to here, so you can see that after this last candle, look at the image and the shape of the candle. After this last green candle, this candle formed on the monthly time frame, and we have this big down movement. So this is like a change of trend here. And after this big move, you now have a correction. What kind of correction do we have here? You have A, and you have a B. And I've always told us it's an ABC correction. After this move here, down here, you have an A wave, you have a B, and you have a C. So the C went ahead and broke the top of this one, but this is the initial move, an A, B, and a C. And after this move, we had another thrust down. Now, after this thrust down is just a correction, and not necessarily it didn't continue to go down. So what they did here, you have to understand, is that after this move, which is another one move, you can say it's X, then they did A, or we can say after this move, like this is an X because this is A, B, C, this is an X, so this is A again, this is B again, and the C leg went up. I hope you can understand that. So this is the first move here, which is the first wave of correction. Then you have an A, B, and a C. Then after the C, you have a movement down, which is another X. A movement against it again, an A and a B, and this C went all the way to this point. Now, if it's going to be a correction that is going to push the price further down, you are telling yourself that, okay, maybe this is an A, this is an A B. If you have a C around this area, you want to sell. That is what you might be thinking. You want to sell. But when you now do your fib retracement analysis, that probably price should not go beyond an area. So once you see that price has broken your analysis, the best thing is to stay out of it, because if you are thinking that they are going to come down, you'll be dragging your money into negative to this point, and that will break your account. You must understand that philosophy, that once you do an analysis, because if this one had moved sharply down like this, and you have an A, B, and a C, and this one came down, but it never broke low, it seems that they have not finished their correction. You did another A, another B, and you are telling yourself the C should end somewhere around this area. And after this, they broke above it and they are continuing to go up. Then you tell yourself, once the limit of what you call correction has been exceeded and the price didn't reverse as expected, close your account, because if it's dragging negative, it's going to blow you. Now, unfortunately here, they just did a small correction after this move, A, B, C, and to have another X, they now did another A and B, and you think the C is going to end at least at 100 at this level. They broke above it somewhere here. You should know that once this one had broken above this level, they are not stopping. So this is the level that once you see this and you see this one close, you must close your account. You must close and not allow this to happen. So we are going to transfer this knowledge to what we'll be doing subsequently. Now, this now is a move to this point, and these had finished this trend. This has finished the trend here. So they finished the move here, and this is like the first move, like you had in this condition here. This is not a 5-wave move, but unlike this one that is a 5-wave move, they did a 5-wave move to correct this entire movement to this side. What is going to happen here? We are going to see what is going to happen here too. Now, they did an A, they did a B, and we are telling ourselves this should be a C. They did an A, sorry, after this move, they did an A, which is here, they did a B, and this is a C. And that is, we are telling ourselves that this C should end very soon. And because it's going to be a 5-wave structure. Now, looking at this, A and a B on the monthly time frame, you know, price had gone seriously up. It has gone seriously up. So for this movement to be a B and for this one to be a C, and price is now seeing what is going to happen here. When they want to change trend at times and they want to change, the first move is not the kind of a move that they're going to thrust the price down. The first move like this, correct it back up like this on a bigger time frame, and after this, we are going to see what is going to happen here. If price should break above this one, and we see a price action at this level that indicates that price is going to go higher, then you should not know that, you should now know that yen is not going to sell. But again, we are going to look at the internal structure here to see if this 5-wave is completed or not. We are going to look at it, if this 5-wave is completed or not. Now, look at here also, when they're going to finish this wave, see the way they went up sharp. And these are volatility that took the price so high up to this point. Because we must learn from the past thing that have happened to price. And this is a very big move within 1 month. And if you want to count the internal structure, you won't count it right. Right from here, how many pips? If you want to count that, right from here down to the bottom, it's like 2,400 pips within 1 month. There's nobody who will survive that. 2,100 pips. Nobody will survive that within a month. And it happened all within a month. You can't count the internal structure of this wave correctly. But we are able to now see that this wave here had gone up rather correctively. It's a corrective wave. And they extended a correction that we are seeing here, like a C. That is what we are seeing here. If you look at it, we said if this is A and this is B and this is, oh sorry, if this is, after this first sharp move, this is A and this is B and this is C. They came here again, they move it down, A and B and C. And they're now using this to correct all of these. And this is not like a 5 wave, probably not like a 5 Elliott wave, you know, but this is what we have. Let's now focus our attention on the last leg after this correction. After this A and B, and this is the last thing that we are looking at. You must pay attention to what correction is on the higher time frame. Now, the price had moved from here to this level now. This is where we have currently. So I'm trying to draw a trend support. That's a trend support for wave 1. And if I want to drop for wave 2, wave 3, the trend support for wave 3, this is where wave 3 starts from, and up like this. This is trend support for wave 3. You have to know how to draw this trend support for wave to be able to catch a move as early as possible. Now, this is a very big time frame. This is a big time frame. So we are looking at the internal structure of this wave. Wave 1, there are waves that are long, that are thrown up sharply. 2 and 4 are usually moving sideways. Like here, these are corrective waves. You can see that it's flat across. This is also a correction, flat across. This is also a correction, flat across like this. This is also a correction, flat across. And this is a small wave here, flat across. This is how correction will look anywhere. If you are looking at the monthly, the weekly, the daily, this is the way they are going to look if you compare them to all other wave structure. So you can see that from here to here, this went up straight, 1 and 2, and you have a correction. So this is the internal structure of wave 1. So wave 1 actually started from this second pink here, so second purple here, and lasted here at this second purple. Forget this one. This one is not important for now. Let me just, now, the 1 here is not important. So we are starting our way from here. This is 1, and this is 2. So from this first, the beginning of wave 1 and wave 2, at the end of wave 1. So how many pips do you have locked in there? So you must know that if you are having a correction, how many pips you see locked in there? It's what? It's about 750 pips, which is big. Just wave 1 alone, 750 pips, and that is big, it's huge. Now, you now have correction of wave 2 to this level, from here down to this level. You see how they are compared to this kind of a candle that has a full body. When you see full body means it is impulsive, good strength, and is being thrown high. So on this is monthly, 1 month, and look at the corrective wave. They are not full body. Corrective wave will always look like this on any time frame. Now, this also is a corrective wave, even though this one is full body. But I can tell you from the look of this one, this is a zigzag correction here. You will see it. This will be a 5 wave, and this will be a 3 wave in the middle, and this will be a 5 wave, which is a zigzag. So if you open up this, that is where it's going to look. So what I'm trying to tell us is that I know I've studied the way they will look on the monthly, on the weekly, on the daily, on the 4-hour time frame. So you must be able to identify them to now know, oh, this is where we are now. As I'm saying now, this is wave 1. It started from here, it ended here. 2 ended at the black. Then you now have the first wave of 3 This is 3, 3, and this is 3, 2. So the wave here is wave 3, 1 of 3, because it's the longest, and this is what? 2 of 3. Then when you get to this point, the wave here also, this is transition here between here and here. So you now begin to have an internal structure here that connects and leads to what? 3. This is wave 3, 3, and you now have 4 of 3. So which is also expected to be what? A correction. So 2 of 3 and 4 of 3. Here is what? After 1, you have 2. And this is what? 2 of 1 here. With 2 of 1 and 3 of 1 should be somewhere here. If you open it up, you will see 3 of 1 and all of that. But 1 ended here, and 2 and 3 of 1, 2 of 3, 3 of 3, 4 of 3, and this is 5 of 3. And after 5 of 3, that ended with 3. And now we are saying that this one, it's like wave 4. And after wave 4, you are going to first have what? Wave 5. And this is part of wave 5 that we are seeing. This is wave 5 on the bigger time frame. Now here is the first cross of wave 5. So we have done 1 of 5 and 2 of 5 around this area, which you are going to see later. So we have done 1 and 2 of 5 around this area, and this is what? 3. This looks like what? 3 of 5. So we have not ended 5. And when you see wave like this on the weekly time frame, it tells you that this thing is still going to go a bit up before they finish. So they are still going to, they are not yet going to sell EMPR according to wave structure, except they truncate it, and we are going to wait. I still think that this wave, we get to the broken lines here or a bit above it before they send the price down. That is what I think from this structure, that the EMPRs is not ready to sell from this structure, and we're going to see, but we are getting to the end of it. Now, this is the level we were, that I was saying that we're expecting EMPRs to fall. But then we thought that wave 5 had ended here. So wave 3 had ended here, and they are finishing with 5 here. So, but we were wrong not to have read this, because they fooled us with this kind of a move here. If they have done 3 of 3 and 4 of 3, this should be 5, and price should have fallen from here. That is what they did here also. Look at this section 2. This small section here, they had done something like that also. After they had done what? 3, 3-1 and 3-2, you will think that this is what? 3-3 and 3-4, and this is 5. So they just did a little correction beside it. And the same way, what they did here is what they have done around this area to finish with 5 here and 4. And now you can even say that from here to here looks like 4. And they are now doing 1 and 2 of 5. And this is the body of 3. So now let's now shift to weekly time frame for us to see this thing very better. Now, switching to the weekly time frame, we'll see it better now. Let's look at it now here. This is it. Now, this is where they ended the correction and they formed a price action here. If anybody had seen this on the weekly time frame, you wouldn't have even read it until you see the candle begin to form. So the beginning of wave 1 of 1 and 2 of 1, and here is 3 of 1, here is 4 of 1, and they finish 1 here, and they did wave 2 correction here. So you are seeing it. So wave 1 is one of the shortest, and wave 2, wave 5 and 1 are the shortest really, but wave 3, wave 5 cannot be as long as wave 5 cannot be as long as wave 3. It can be the same as wave 1 or a bit longer than wave 1, but not the same size with wave 4, with 5, with wave 3. So now from here we are finished 1. So this is like 2. Then we now have the first wave of 3, 3, 1 here. This is like 3, 2 here, and this is like 3, 3 to us, and this is like 4, 3, 4 here. And after this 3, 4, they did this one to confuse us, but it's still part because they're not really broken out of it really, because we just add price actions, because these are things we have to see. See, these are big moves to tell us that they want to move. These are big move here. When you see this move like this, they are big move like this. And so they did correction here. And this is like 2 of 3, 3 of 3, 4 of 3, and part of here, they now did 5 of 3, and they now finish, after 5 of 3, they now did with what? With 4. What did I say? Okay, sorry. This is still part of 2 of 3. Yeah, this is still part of 2 of 3. They did this one, 3 of 3, 4 of 3, and they now finish with 5 here. And after this with 5, that is 5 of 3. This is 5 of 3. So after this 5 of 3, they did correction, you know, and this to begin with 5. So this first move is what if with 5, 1 of 5, and the one we now have here is with 2 of 5. That is what we are looking at now. So you must know that, you must quickly spot that this is where 5 ends. You can see the thrust here. The last wave of each move is going to be like a thrust here. Just like wave 1 is a thrust, a correction, wave 3 of 1, a correction, and this is wave 5 is also a big one, and you now have a big correction. The first part of 3 is a big wave. It will go like in a straight line. You have a correction, and these, and the corrections, and another big wave that's almost in a straight line to finish 5, to finish 3 of 3, and we now have 4, and we have 5 here, 5 of 3 here. Then you now have this correction. And after this correction, the first correction, this correction in the middle, and they now started with what? Wave 5. This is the first wave of 5. This is 2 of 5. Now, I believe that presently, after 2 of 5, you can see that the 2 of 5 is a bit also big in terms of weeks. How many weeks? 1, 2, 3, 4, 5, 6, 7, 8, 9. 9. It's about 2 months. So they did that within 2 months. We might be seeing this wave within 4 of 5 to finish within 2 weeks or thereabouts. It might take 2 weeks or a month to finish, but we'll see it. But I think what is happening now, they are collecting with 4. And after wave 4, they're now going to end it up like here, the way they ended with 5 of 3 here. This is 5 of 3. You can see how long it is. From here to here is 5 of 3. And from here, from this place here to this point is 5 of 1. From here to here, 5 of 1. From here to here is 5 of 3. And now, so after the correction, we're going to see sideways correction. This one is giving back to 5 sideways correction. We're going to have all of that here before we move up. So, and after that up movement, that ends the wave, and price is going to come down and change direction. That is what we should expect. Now, in terms of reading this candle, the way it has closed last week, I know price will not just reverse. It doesn't occur like that. Price won't just reverse like that. It won't just reverse like that. And when I see this also last week, this is last week now, and you can see it's an inverted hammer, and it's still predominantly greenish. It means that price is still not done. But from here, this is the biggest move that they can have on 3 or 5. That is just the thing. So we might be seeing, so if you look at this move here, when they add this correction here, this correction took like almost how many pips? About 400 pips. So we might be seeing a movement a bit up here and around this area of about 300 pips or so, or 400, between 300 pips or 400 pips. And after the last movement, they're going to throw it up and finish 5 of it, and the price will fall. And that is what we are going to, show interest to know the internal architecture, because this is where it is very, very important for us to count the wave of correction to be able to now know when they're going to fully move down, and they're going to change it almost immediately, and they might just give us a signal. So now let me quickly again shift to the daily to now see, since we have seen how they look like on the weekly, from the monthly to the weekly. So how do they look like on the daily? So we're now seeing the daily candle. When you know this thing, you too, you can question any trade, any signal when you know this thing. So this is the way they're now looking like on the daily. This is now, so see the way we have shifted the daily now. This is the daily. This is the way they will look like on the daily. And it's going to confuse anybody. And that is why you have to look at the bigger picture. See, this is where they turn. After this move, of course, you know what to do. Once we go off, you relog again. So after this move here, they move. This is the first part of wave 1. See, second part of wave 1, how it looks like on the daily. And each candle is one day in this kind of. So when you're not looking at 4 hour, it will be messed up. It will be like plenty candles, and there is no way you will easily decode it. So each candle is a day. And what do you think is going to be locked in here if you're dealing with 4 hours? Big one. So the first part, you can see the first part of it, which is 1. It went up in a straight line. That is the way it will look like. This is the daily candle with 1 of 1, and this is 2 of 1. And here you see this 3 of 1, and 3 of 1 ended here. This is the first part of it, and it now gave you 4 of 1. After giving you 4 of 1, then it threw this one up in a straight line to be 5, because 1, 5, and 3, they will always be big and in a straight line. So look at it. 1 from here to here, is 3 of 1, and from here to here is 5. So this is 4, and this is 2 of 1. Now, after that 2 of 1, they now have a big 2. And this is the way a big 2 is going to look like. A big 2 ended here. From here, they did like this. 1, 2, 3. They did like this. So this is the first move of it. So I want you to see this to understand what is going to happen. I'm going to take my time, because we are in a place where we need to understand this and see what is going to happen at the end of that move that we're looking at. This is the daily. Just trust me, follow the daily. After 5 here, they move it down. So if you're not careful, you think they want to be moving down. No, this is the first move of a correction. But now we now see this as what? A and B and C. We'll see it as A. In fact, after you see this move 1, we'll see this as A, B, and C. And after that, oh, sorry, please. It's not going to, because we are still in the line of trend, except when something changed. So this is 5 of 1. So this one is the first correction, which is A. This will be B, and this will be C. And this will be X, which is in the line of the trend. So this will be X. Then they went down again as A, and this one is A went down. Let me enlarge it. So A went down, a B, a C, and X again. They now did this one, A, B, and C again. They did this one. So they corrected this one and they ended here. So the fib level, because this one is so messy, it will be messy that for you to count it, you'll be lost. What could have saved you to know where the price eventually will get to later in life is if you have been able to count the internal structure of this one. That this is like 1, this is like 2, this is like 3, and this is like 4, and this is where it ended. All you need to do is let me find where fib retracement of 61.8 at least, or 50 to 85.6 will be. So if you now use this retracement tool and you put it at the origin of 1 and you put it to where 1 ended here, which is here, this line, it ended here, that's where I put it. Now, this is like 61.8, where you are expecting price to finish. Price didn't give you a price action there. Somebody would have entered here. Do you understand? If you have entered here, you are going to watch and count the entire structure, but then price again went down to 76.4. That was where the price eventually moved up. So, and that is why it can get tricky and a bit confusing. So price may have said, okay, I will move down from 50. That really happens with wave 2 anyway. So 61.8, 76, or 85 is where you can expect the price. This is 85 here, it's 5.4. So if price move beyond here, then something is wrong. You close it. That's how to do that. So you have to look at what is going to happen here. So, but eventually, if you have put one signal here, very small, another small one here, or another one here, price would have picked 2 here, and that's how to do it, because you wouldn't have wanted to pick any entry to buy or to sell around this area. You have to wait. But this is like wave 2, and that is what we're going to see, deploy later. Now, you are seeing the way it is on wave 2, 1, and wave 2, then the beginning of wave 3. So this is wave 3 now. So this is 1 of 3, just like we had 1 of 1. So this is 1 of 3, and here is what 2 of 3 in the middle here. Now we now have part of 3 here, which is like 3 of 3. Then we now have 4 of 3 here. You can see how 4 of 3 is going. 4 of 3 never finished because they still ended, you know, stylishly extended it here. It has not given a price action. This will confuse anybody if you are trying to count wave. If you are trying to count wave, it will confuse anybody because they never even moved. So at the end of the day, they did this, you know, as this is where 3 of 3, 4 of 3, and they did this one. These are like the first wave of the last wave of 5 and the second correction of it, and they ended with 5 here. So the way they have gone to end with 5. So with 5 of 3 has been ended. So they finished 1 here, they finished with 3 here. So after that with 3, under correction. This is where we are. Under correction, after this wave, this is a B, and a C, a X, a B, and a C, and a X, and then a B, and a C. And after this C, what did they do? They moved the price up. So moving this price up now, you know, if you have said that they are moving the price up, they move it up, they broke here. This is where they got everybody confused. Just like what happened in this section, you know, they got everybody also confused here. After moving this one, you might say this is what a 4, and they have finished a 4, and this is where a 5 is. And with this 5, price is going to fall here. But what they did here was to now use this wave to finish a 2 and to finish it here. So they now did the same thing to now use part of this wave. This is like what? 1 of 5, a 2. This can be a 2 of 5, and this like can be a 4 of 5. It can be a 4 of 5, or this can be a 1 of 5, and this can be a 2 of 5. If I want to be sincere with you, I would rather deal with this as the first part of 5, which is wave 1 of 5, divided into 5 waves, which is 1, 2, a 3, a 4, and a 5. That is the way I want to even deal with it. I want to deal with this one as the first part of what? Wave 5, wave 1 of it, and in 5 waves. Then I will now say this one is what? Wave 2 of 5. This is where we got it wrong, and it can be like that. So we got it wrong, thinking that they are finished with 5 and they are coming down, not knowing that the whole thing they were doing all this while was just correcting with 2 of 5. Now, this is with 3 of 5, so which is also a sharp wave. 1 of it, 2 of it, 3 of 5. Now, this is going to be a wave 4. And after this wave 4, they will correct this wave 4. After they finish it, they will just take a big move up and they will end it there. So now it is the internal structure of this wave that we are interested in. What do they do when they want to break a level and change their move? We are going to see. I'm going to show you now. So to know when something is not right, to know when something is not right. Now here we have told ourselves that they are finished with 1 here. So not until something gives, because we can count the internal structure here, 1 and 2 and 3 and 4 and 5. Not until we see price action above this line, then we'll think that they are still going to, they are not ready to go up. That is how to look at it. Now, so they continue to do all of this and all of this. See, they even still move down, not ready to move. They are doing some correction. So what showed me that this thing is going higher up is this candle